It's a fitting segue now to a discussion on the national and global economic outlook of agriculture, forestry and fisheries. I wanted to ask the Minister a question about India specifically then, given the recent development in bilateral discussions just last week, noting that India is the largest populous country in the world and growing. Before we do get into this next session though, I'd like to encourage all of you to continue the conversation online by using the hashtag ABARES Outlook across your social media channels. Microphones will be roaming the floor to take your questions, as well as the option to submit them online via the app. As one of the most food secure nations in the world, but not without its challenges, as we heard from the Minister there, Australia feeds some 75 million people through domestic and export markets, adding about $187 billion annually to the national economy. Important as it may be, Australian agriculture is not immune from rapidly shifting market dynamics, the immediate and aftershocks to supply chain resilience amid global conflicts, and a new world order developing before our eyes. But what does this mean for Australia's food security and export opportunity? Our next panellists have sifted through the data, the details, and the noise to provide valuable insights. Please join me in welcoming Ben van Delden, Professor Alex Robson, and Dr. Jared Greenville. Ben van Delden, a climate and agri-food partner at Deloitte, has for 28 years been working at the forefront of digital and ecosystem leadership transformation in the agriculture and food sectors across Australia and New Zealand. As an advisor to governments, research organisations and the private sector, his work is focused on digital agri-food solutions, circular economy and systems leadership. Professor Alex Robson commenced a 5-year term as a full-time commissioner and deputy chair of the Productivity Commission in March 2022, with positions to his name including Senior Economic Advisor and Chief Economist to the former Australian Prime Minister, the Honourable Malcolm Turnbull. Professor Robson has a broad range of experience in academia and the public and private sectors, most recently as Associate Partner of Ernst & Young. But now, for an economic outlook on Australian agriculture, the Executive Director of ABARES, Dr. Jared Greenville. In this role, Jared leads a comprehensive program of scientific research and economic analysis across Australian agriculture, fisheries and forestry. The Bureau's work underpins the development of Australian government policy, as well as decision-making from the farm gate to national industries and international markets. Jared is also Australia's current representative at OECD forums on sustainable agricultural production, global food security and climate policy. Over to you, Jared.
Thanks very much, Kate, for that wonderful welcome. And I'd like to start off by welcoming you all to Outlook 2025. We're excited to have you back. There's a lot of familiar faces, a lot of new faces. And for this year, again, we're trying to bring you this in a hybrid format. So thanks for coming along. This year also is a special year for ABARES. As the Minister mentioned, it's our 80th. Now, ABARES' roots trace back to 1945, to post-World War II, John Crawford, Nugget Coombs, who were concerned about post-World War II reconstruction. Now, this was a period of both considerable uncertainty, but also considerable opportunity for the sector. Now, a lot's happened to both ABARES and our predecessors, and also to Australian agriculture since 1945. And now, while the sector's share of the overall economy is much smaller than it was back then, it's still a growing and profitable part of the economy and the lifeblood of much of rural and regional Australia. When we look at today, it's fair to say we're again at a point of considerable uncertainty, but also opportunity, as the Minister highlighted. Global uncertainty remains strong on a number of fronts, not least the international trading arrangements, which much of the sector is heavily reliant. Productivity, competitiveness and responsiveness to markets are all ever-present strong points for our sector, but are also increasingly challenges. Australia is a world leader in sustainability, but our expectations are rising. It is likely that further productivity and profitability gains will be hard fought. At the moment, we're seeing a multi-speed industry, fewer new entrants, some breaks from higher land prices and climate change all at play. But that said, opportunities do exist. Action will take effort and will come with a range of different issues, and that's the focus of the next 2 days, and we'll discuss in detail some of these different elements. But one thing we know is that success will help the sector remain competitively sustainable. And so what I wanted to do was to start with a snapshot of where we are today. Australian agriculture and fisheries and forestry have had a mixed but overall successful year. In some parts of the country, seasonal conditions were excellent. But in others, farmers had to deal with dry conditions and also adverse weather events, and we've got more on the way. More positively, livestock prices rebounded and improved from the lows of last year. But for sheep and wool have remained below the long-term averages. Grain prices have softened but remain strong. These factors have seen quite a growth in the sector this year, with agriculture sector values growing from $83 billion last year to $92 billion this year. Both fisheries and forestry sectors consolidated production values, coming back from some of the uncertainties that we saw in both trade markets and also economic conditions of last year. Values for these sectors have remained stable at around close to $6 billion. Now, as we look forward to next year for 25-26, our current forecasts are starting with the expectation of fairly neutral seasonal conditions. And if realised, this will see lower volumes for cropping than achieved this year, but still a solid result. Livestock sectors are expected to see production stabilise after last year's rise, but see further improvements in prices across the red meat sectors, helping lift values. We're expecting prices to come back to the long-term average for beef, but continue to be below the long-term average for sheep and for wool. The value of agriculture under these conditions is expected to fall only slightly by 1% to $91 billion. With fisheries and forestry included, overall sector value is forecast to reach $98 billion, which if realised will still be the third highest in nominal terms on record. Now, we've discussed this already, but with much of Australian agriculture exported, international markets are critically important for the sector's fortunes. And there's a bit going on in international markets at the moment, it's fair to say. Something that we'll pick up in quite a bit of detail later on today. But for next year, despite both up and downside risks faced by this environment, we're expecting our competitiveness on international markets to remain strong. Overall, we're forecasting that exports will reach $72 billion next year. This comes off the back of a rise this year where exports hit $73 billion. Lifting up from last year's 71. Livestock and livestock product exports were strong this year, rising by close to $3 billion. We're also seeing beef and veal exports up 20% in value terms compared to last year, and sheep meat rising to its highest record on value. Australia remains the world's largest sheep meat exporter, increasing exports to all major markets. These movements in domestic and international markets have had an impact on farm cash incomes. This year, we've seen a rebound in average broadacre farm cash incomes, rising from the lows of last year. Improved conditions in many areas and improved livestock prices have helped lift farm cash incomes, which are expected to rise 72% from $124,000 on average to $213,000 on average. Next year, with those more neutral conditions, but continued improvements in sheep and cattle prices, we're forecasting broadacre farm incomes to increase a further 20% to around $260,000. However, those continued low below long-term average sheep and wool prices will once again create challenges for sheep specialists. On the profit side, as you can see from the chart, trends are expected to follow farm cash incomes, with average broadacre farm profits expected to reach $110,000 next year. Now, this rebound in farm cash incomes and profits represents a good starting place as we look to handle that uncertainty in the medium term that we know exists. Now, the global economy will continue to be influenced by the ongoing conflicts that we see around us, including whether any resolution to these conflicts can be reached. There's also uncertainty around the world trade markets across the board, with a potential for a lower global growth as a result. At home and closer to the farm, the pattern of seasonal conditions will be an important determinant to the outcomes of the sector. So as mentioned, our medium-term forecast starts with the initial possibility of a neutral year, which brings in with it both the option for both wet and dry years over the next 5 years. The timing of these different seasonal outcomes will have an impact on the aggregate results. A sooner wet year under these conditions, shown by our baseline scenario, will set the sector up for greater resilience compared to a sooner dry year, as shown by the alternative scenario. Overall, we're expecting sector value to sit between $79 and $94 billion in today's dollar terms. However, as we'll come to later in the conference, the expected variability in seasonal conditions will influence the different sectors, different industries in different ways. Our medium-term projections do show, however, that for agriculture, further growth in real terms will require effort. And as we reflect on 80 years of ABARES, it gives us good opportunity to reflect on agriculture itself. Now, Australian agriculture has improved its competitiveness, achieved both productivity and a good sustainability record by being lean and clean. And this has been supported by the opening of both domestic and international markets. And we can see this by looking back at farm incomes. Now, we've been collecting, analysing and researching the sector for quite some time now. And our longest continuous time series is based around farms with more than 200 sheep. Now, that was a good definition of a farm back in the 1950s when we started to collect our surveys. But what you can see from this chart is that farms that meet this criteria, that farm cash incomes in recent years, expressed in today's dollar terms, are stronger than at any point in the past, even lifting past the highs of the 1950s, where wool prices were high in the midst of the demand for wool caused by the Korean War. Now, the way that we characterise farms has changed a bit since the 1950s, but across a shorter time frame, we can see similar improvements across all broadacre categories, notwithstanding the most recent challenging years for sheep specialists. There has also been significant adjustments, though, that underlie that figure. We've seen significantly fewer farms than we did in the 1950s, different production mix, but Australian agriculture has remained profitable despite these adjustments and changes in both domestic and global conditions. Periods of reform have come and gone and delivered benefits. On the sustainability side, comparisons with our international peers also highlights how being lean and clean has placed us in a pretty enviable starting position. So looking at emissions, for example, we can see that Australian farmers can produce a globally representative basket of production with lower emissions than our peers. Now, as we look forward and productivity, competitiveness and sustainability challenges once again arise, we'll need some new and redoubled efforts to help build on these past gains. The next steps for movements in these will likely be harder to find, but success will improve the sector's ability to be competitively sustainable. Now, the current environment shows that a number of these challenges are already present. And I'll start with productivity. In recent years, productivity in agriculture has slowed, as it has elsewhere in the economy, as we'll hear about soon. This has meant that much of the recent work to improve profitability is being driven by rising terms of trade, and that's the difference between output and input prices. However, as productivity continues to grow across a number of our competitors, and those higher prices that we're seeing across a number of global markets encourage greater production across our competitors, improving productivity will once again be important. But it's not the case that every industry is experiencing the same results. Productivity growth has remained strong in our cropping sector, but it's slowed more rapidly in our other industries. But in those industries, we're also seeing some differentiation. And so looking at dairy, for example, in some recent analysis that we just published, we've found that the dairy industry is looking increasingly like a multi-speed industry. Some areas have done better than others, with differentiation occurring across regions, including some which are geographically close to one another. This opens up the opportunity for cross-learnings, but also indicates that more adjustment could keep the industry productive. There are some other challenges at play also. In agriculture, we're seeing higher land prices across the board and less business churn in some industries. Now, while some of these factors are good for individual farms, At a sector scale, they can limit entry and make it more difficult for farms to achieve economies of scale. In output markets, there has been a trend towards increased protectionism since COVID. Trade measures can both lower international prices, but importantly transmit greater variability into world markets. Importantly, they reduce the competitiveness of our exports in international markets. We're also seeing that climate change is playing a role, and we've long reported that since 2000, changes in our climate have reduced farm profits on average by around 23%. But it's not only within agriculture. Productivity in our wild harvest fisheries and also increasingly sea-based aquaculture is being affected by warming waters. These are both making it more difficult to help recover previously overfished stocks, but is also having an impact on other commercial species. This is hitting both the productivity and sustainability bottom line. On land, we're also seeing similar impacts. For forestry, fire represents a real threat, potentially undoing some very long-term investments. As seen by the graphic behind me, since 1987, there's been a significant increase in the number of dangerous fire weather days across most of the continent. But despite these challenges, there are also opportunities. Many of these will need to span a more multifaceted space. For example, trying to take advantage of investments in carbon sequestration to build productivity and also importantly improve farm resilience. The trade space is another good example, which the Minister was speaking about. Global markets are seeing the increased use of NTMs, and so that's non-tariff measures. As sustainability becomes more of a focus for consumers and for governments, this trend is likely to continue. Not only have the number of NTMs increased, but so too has their impact on trade. The tariff equivalent of these measures, as shown on the chart, has risen from around 1.5% in 2013 to close to 20% in 2022. Now, for Australian exporters, that's the equivalent of taking around $4 billion off the bottom line in export returns annually. Now, not while all of this can be removed, because a lot of these measures can facilitate trade, it does show that there's significant returns from investments to reduce the impact of NTMs on trade. There are other opportunities as well in things that Australia does well. Our recent update in estimating the returns from research and development expenditure for the sector continues to show that it delivers very strong returns. For every dollar the sector invests, we get around an $8 return. I spoke before about that multi-speed dairy industry, but even within similar groupings of farms, there's a big difference between average and best performance. Understanding why, including the regional dimensions at play, will be an important element in addressing this. The sector has also long used diversification as a tool to manage risks, embed sustainable practices, and help build resilience. Now, as the net zero transition gathers pace, further opportunities are going to exist in this space. And finally, competitive pressures have always been an essential element of the lean and clean playbook. Markets continue to evolve, both on the input and output side, and competition policy settings will be critical in ensuring we have the right competitive pressure across the agro-food value chain. Now, just to sum up, improving the sector's competitive sustainability position will help build on a It will help build on a past of successful reform and performance. And while we can point to both productivity, competitiveness and sustainability challenges, opportunities for growth exist around addressing NTMs, R&D, lifting to best performance, along with keeping markets competitive and leveraging potential investments that will flow from the net zero transition. Over the next 2 days, we'll go into some of these aspects in much more detail, but soon we'll hear some excellent insights from my two panellists on stage. So finally, to end, thanks again for coming to Outlook 2025. We really hope you enjoy the next 2 days. If you'd like to know more about our work, please jump on our website or speak to one of our staff who will be around for the next few days. Thank you for listening.
We've heard there from Jared about some of those key factors influencing agricultural productivity. We'll now hear from Professor Alex Robson to give us some more insight into the economy-wide productivity challenges and strategies to overcome them.
Well, thanks for inviting me to the conference, and I hope it's enjoyable and a productive use of everybody's time. I'm sure it will be. So today I'm just going to talk at the aggregate level about Australia's recent productivity performance and a bit of it on the outlook. And then I'll delve down into some research that we've recently done at the PC on what's been going on at the aggregate level and thinking about it a bit more carefully. And then also I'll provide some comments on the agricultural sector in particular. So what's been going on with productivity in Australia over the last decade or so? So this is a chart that shows labour productivity over the last 10 or so years. So labour productivity is output per hour worked at the aggregate level. And I want you to just focus on that middle line there, the whole economy. So what's happened over the last sort of decade or so is that if you look at that as taken as a decade, Australia's labour productivity has remained basically flat. If we take beginning of that period, say June 2016 to September 2024, we're basically where we were at the start of that period. The major exception was during the COVID period, where closures of industries and restrictions on what could be done led to an increase in measured productivity. So that was as a result of relatively low productivity industries shutting down or cutting back. Measured productivity went up, and then as the restrictions unravelled, that all unravelled as well. And so we've been basically skirting along that same level as we were before the COVID period. So why does that matter? Well, labour productivity is a key driver of long-run living standards and real wages. So if labour productivity isn't rising, people start to feel it. And that's another way of thinking about the cost of living issue in Australia, is it's actually a productivity issue. So that's why we care about it. You can break things down into the market sector, which is doing a little bit better, the non-market sector, so things like the care economy, education, health, those sectors where goods and services are not exchanged for prices. It's not doing so well. But overall, it's an urgent problem that's facing Australia, but it's been urgent for the better part of a decade. So that's the aggregate story. It's not a very happy story, but that's where we're at. Just in terms of the numbers, if we look at the year to September, so over on the right-hand column here, labour productivity, September 23 to September 24 fell by 0.8% over that year. So there's different ways of breaking down the numbers, but they all paint the same picture broadly. But as I said, this is not a new problem. It's been around for some time. Another way of looking at this is to think about where Australia is relative to other major economies. And a particular standout in terms of other major economies is the United States. So we did some work in one of our quarterly bulletins last year that showed that any way you cut the data in Australia, headline productivity or adjusted without mining, you can do all of these measures. We're falling behind the United States. Now we just point that out because first of all it's interesting, and to think about, well, why is that the case? But Australia is not unique relative to the United States. There's a lot of other OECD economies that are falling behind the United States. And that's interesting simply because it does show that, well, the United States, there must be something special about it, whether it's the measures they took during COVID or other features of the US economy. Obviously very different economies, Australia and the US, but there's something going on in the United States, and there's a lot of research going on as to why that's the case relative to other OECD economies, and we still don't know all of the answers, but we think we're getting there in some part. So that's all setting the scene. It's a pretty sobering story for Australia. There are success stories, and I'll come to them later on, but at the aggregate level, The question is why do we have this productivity slump? So part of the story could be that, well, Australia is now largely a services economy. 80% of GDP is in services, so that's everything except mining, manufacturing and agriculture. And securing a productivity gain in services industries looks quite different from what it might look like in those other sectors, and it's more difficult to measure. And so that's part of the story, not only in Australia but around the world as well. So if you think about sectors like the care economy, financial services, education, health in particular, getting a productivity gain in something like a hospital or a school doesn't look like it would look like in agriculture or manufacturing. You can't just replace a piece of equipment and suddenly everyone's more productive. It's more to do with the quality of the service, how it's individually tailored to customers, ways of organising those services within those particular sectors. So that sort of productivity gain is more difficult to secure than what it might have been in the past in goods producing sectors. And it leads me to the importance of what's known as multi-factor productivity. So there's different measures, ways of thinking about productivity in the economy. Best way to think about multi-factor productivity is just new ideas and the application of new ideas and new ways of doing things. So you have your physical inputs and then the way in which they're combined with each other. Well, there's different ways you can do that, better ways, some ways are better than others. That's your multi-factor productivity. If that's improving over time, then you can do more, produce more, even with the same inputs that you've got. And so it's really important thing to think about in terms of improving Australia's productivity performance. And the issue in Australia has been over the last year, and the last financial year, that measure of productivity improved by only 0.1%, well below the 20-year average of 0.3% per year, and then well below the 1.6% per year in that decade between 1994 and 2003, which was a boom decade. So the question is, are we just coming up with fewer new ideas, or what is going on? Why is this measure so sluggish, and how can we improve it? So the PC's done some research on this recently, and it's a neat way of thinking about the problem, and it does provide a few insights, we think. So to get that multi-factor productivity growth, think about a farm or even a coffee shop, or any sort of business you can think of really. To improve the way in which you combine inputs, you need a new idea, a new way of thinking about, well, how can I organise production here? How can I combine the workers and the equipment to get more out of them? So I need that new idea. That's one of the key ingredients. The second ingredient is, well, once I've found that new idea, I actually have to apply it or use it. And that's what we call eliminating this inefficiency and reaching the new frontier. So there's two parts to it. One is that the frontier actually needs to move out. We need to have this new idea. And the second one is we actually have to implement it. And if we think about that in the aggregate for Australia, and this is based on research that we just released last week, here's the story of what's been going on over the last 30 years in Australia. So the top light blue line there is the frontier that I was talking about in the aggregate. So this is what is possible in the economy given the new ideas, and it sort of measures the rate of progress of discovery of new ideas in the Australian economy. So thinking about knowledge, ways of doing things, better educated workers, all of these are new ideas as a shorthand way of talking about all of that. And what's happened to that frontier is it was growing rapidly, as you can see at the beginning of that 30-year period, but then it slowed down, but it's still growing. So the frontier is still growing in the aggregate. The dark blue line there is what's actually been happening. Okay? And the gap between them is the inefficiency. So what's been happening in Australia over that 30-year period is not only has the rate of growth of discovery of new ideas, wherever they might come from, it might be domestic or from overseas, that's been slowing, but we just haven't been taking up those new ideas at a very good pace. And so this inefficiency gap has remained stubbornly high, and if you measure that, it's around about a 7% gap in the aggregate between the frontier and where we actually are. So that suggests then, we hear a lot about policies, and we've got to have these new ideas, and that's obviously very important. So we've got to have research and development and come up with these new ways of doing things. It's vital for Australia. But the big component of it from this diagram is that we also have to diffuse those new ideas, so make best practice common practice, as Jared was talking about, not only in agriculture but other sectors as well. And it turns out that 98% of Australian businesses don't do this new-to-world innovation. They take an existing idea and apply it to their business. So the key then, in terms of policy, to think about that is, well, what is it that's holding back the adoption and adaptation of new ideas right across different sectors? And there's no easy, straightforward answer to that. It's likely to be different across different industries. Some industries are very good at taking up new ideas and applying them. Others, because of the structure or whatever it might be, are not so great. And the question is, what are the barriers in terms of policy, and what can we do about them? So this is a really interesting piece of research, and it brings me to agriculture, which is actually a very positive story over the last financial year. So if we think about what happened in agriculture, and when I say agriculture, it's agriculture, fisheries and forestry, multi-factor productivity, so this sort of measure of the rate of growth of new ideas, grew by 7.3% in the last financial year. And that was the fastest growing sector in Australia. So that's a very positive story. But what's even more interesting is if we take that little decomposition that I showed you before and look at what's been happening in agriculture, fisheries and forestries, what you see is actually, unless there's, those are periods of drought or poor weather conditions in the aggregate, those little dips there, or sizable dips, but there's almost no gap between the frontier and the actual. So that suggests there's something going on in agriculture, forestry and fisheries where the new ideas are being discovered and they're being applied. And so that's something we'd like to hear more from the sector about. What is it that's exactly going on there that's quite different from many other industries and sectors in Australia, and it's a very positive story in terms of this decomposition. It's obviously, as Jared was saying, multi-speeds, and if you look at different geographic areas and different parts of the sector, you get a different story, but in the aggregate, it's a very positive story that we found from this research. So we are running 5 inquiries at the moment simultaneously, which is kind of unusual for the PC, but it's making us all very productive. And so we're looking at these 5 pillars of the Australian government's productivity growth agenda. So the first one is on creating a dynamic and resilient economy. So the topics here cover everything potentially from looking at things like tax, regulation, openness, innovation, insolvency, those kinds of things. But we're interested in thinking about what is it from the agriculture sector that makes that sector resilient, what's made it resilient in the past, and whether there's lessons for the rest of the economy, and the dynamism as well that Jared was talking about, so the market entry and exit, and whether there can be things done to improve it, not only in that sector, but right across the economy. Building a more skilled and adaptable workforce, so this is all about our education system at every level and making the productivity enhancing parts of the economy more productive. So we think about education as an input into all of these other things. How can we improve the outputs and in that sector and make education get more value added per hour worked? And there's a range of things that we're looking at there. It's also, we're potentially looking at occupational licensing and other aspects of organisation of the workforce in Australia. Harnessing data and digital technology. So this is obviously a very big one, the promise of AI, but there's also other things in telecommunications, internet access, and the organisation and governance of data. So that's obviously a key input into almost all industries these days, and so it's important to have a fresh look at that and whether there's any policies that are holding back Australia, particularly given international developments in Europe and the US. Delivering quality care more efficiently. So this is all about the care economy in health, disability care, childcare, all of these sorts of aspects that, how can we make sure that consumers are getting value for money given the high costs of these industries, but they're also becoming more important as the population ages. And the final one is investing in cheaper, cleaner energy and the net zero transformation. So obviously that's promises many opportunities for Australia, but there's also a lot of challenges in making that transition to net zero. So we're interested in what can be done there to improve policy, particularly in adaptation, which is relevant for the people in this room as well as more broadly. So those are the 5 pillars that we're investigating. It all comes back to those charts that I showed you. How can we improve productivity at the aggregate level to get real wages, maintaining that increase in living standards and real wages and addressing cost of living challenges in Australia. So we're interested in hearing from all the people in this room and Australians more broadly about their ideas. We did a productivity pitch earlier in the year where we got more than 500 ideas from the general public. Some of them were excellent, some of them not so good, but we'd take everything on board. But it is good. It's the first time we've put out something like that and hear from the public about some of their ideas for improving productivity in Australia, and it's been a very worthwhile exercise. So I might leave it there, but I look forward to hearing from the rest of the panel and having the discussion afterwards. So thank you for listening.
Thanks, Alex. That sounded like somewhat of a call to action for those in the room and those joining us online about those good ideas. So please add those to your list of questions that you'd like to ask as we get this discussion underway. You can submit those via the app or look out for the microphone. We'll hear now from Ben van Delden about transforming Australia into a superpower.
Thanks, Kate. Well, good morning to all of you in the room, and to those online. It's a real privilege to be having this conversation about the immense potential of our sector. As earlier speakers have expressed, we are blessed by an abundance of land, and as Patrick Hone regularly reminds me, one of the largest coastlines and oceans at our fingertips as well. We do produce enough food to reach and fill the mouths of 75 million people around the world, and we do that in 6 temperate climatic zones and with some really ancient soils. And we managed to do this by farming some 52% of our 7.6 million square kilometres of land. So we are doing some incredible things, creating jobs for 2.3 million Australians. That's nearly 10% of the population have some form of involvement in the economic activity of the food and ag industry, which contributes nearly $187 billion to the economy. We should be very proud of that, but I think we have immense potential to go well beyond that, and that's what I want to talk to you about today and reflect on the experience that I've had as a task force member over the last year, looking at what is Australia's food and agriculture potential if only we were to embrace our climate smart farming practices and really go to the world on that basis. So there is a lot of challenge that we're looking into as we try and achieve that growth, of course, and that challenge is probably best articulated as a real tipping point for us today. No time in the history of the world has there been such volatility. We see it every day. This last week has been particularly sobering in terms of change coming through at a geopolitical level. But with that change also is changing market requirements, as Jared talked about, with non-tariff measures. A lot of the companies that are buying Australian produce are seeking more insight from us on our sustainability credentials and wanting more validation of what's behind our product, but also understanding better about how we make our product. How we get our products to market, the trade routes we use, those are shifting for us all the time. There is a lot to be staying on top of. And increasingly, the questions that we're asking are flowing all the way back to the farm gate. And that pressure is being felt by Australia's producers, as well as our food processors. So we talked about this being a tipping point, and that really mobilised the bringing together of an Australian food and agriculture industry task force to look at what could we do to really stimulate greater growth and take advantage of the opportunities that lie in this rather volatile and challenging time. So within all of these challenges, there are opportunities, and that's what I want to share with you today. I would just pay my respects to the colleagues on the task force who gave up their year last year to really lean in to these topics. The work involved exploring market insights in other nations around the world that have seen opportunity within the same changing, volatile global environment with market studies, as well as primary research into farming practices here in Australia. And I look forward to sharing some of that with you. The essence of what the task force was seeking to achieve was to find our strongholds and really look at how do we amplify those. And the opportunity for Australia, the task force believes, is very much around accelerating the uptake of climate-smart farming practice and food production. And we're starting this process not from the beginning, but off a very strong base. A bit of research across 200 landholders and farmers over the course of this program of work identified that Australia has already a significant amount of climate-smart farming practice adoption in place. We have been working at this not just because it's sexy and required by sustainability standards, but it actually makes sense when you're producing in our environment. We also have identified that when you adopt these practices, you can improve your financial performance as well. In fact, 70% of those that had been engaged in climate-smart farming practices said they experienced a 70% uplift in resilience at a farm level. 63% observed greater environmental benefits, and a really impressive 52% spoke about productivity benefits, particularly increased yields that they're achieving as well. So with that, it's unsurprising that over half of that farming community across Australia that participated in that primary research have indicated that to them, the benefits of climate-smart farming practices are really abundantly clear. But there are still some key challenges to overcome. 2/3 expressed that the cost of entry into climate-smart farming practice is a challenge. It is a barrier. And it's particularly over that formative first 3 to 4 years of transition where more support is called for by the farming community. 28% spoke about some form of financial compromise, and that was particularly in those early years, and then they see that return and give them benefit down the track. 75% spoke of the need for greater financial assistance, compensation, or recognition. And I think it's really interesting when you pause on the compensation or recognition points, that what we're seeing in other markets like Canada, like Denmark, like the Netherlands and the UK, is greater collaboration between the brand food processors, the retailers, and the farming community, and how they work together to reduce their emission footprint and compensate the farmer for the work that's happening behind the farm gate where a lot of these big challenges are. The survey information also enlightened us that whilst there are great programs available to support Australian farmers, not many are actually participating in this. So we are seeing an underserving of access to the climate-smart farming programs and more broadly carbon programs that are available in Australia. So, is it worth doing anything about this? Deloitte Access Economics modelled the benefit of a 20% increase in climate-smart farming practices across 3 core production areas in Australia. And by 2030, that research identified that we would get nearly 36 million CO2 equivalent tonnes of carbon emission reduction from that activity, nearly 9 million hectares of habitat improvement over that period of time, and 4% or nearly 13 million hectares of improved soil health on our agricultural production land. And when we put all that together, that leads us towards a 22% increase in farmer gross margin improvement via natural capital activities, worth close to $7 billion to the economy. So we think that there is a real opportunity as a task force for Australia to really lean in on climate smart farming practice, support more adoption of this, and importantly, capture, validate, and emphasise that story into our global markets. When we were doing this research, we spent some time with Carlsberg in Denmark. And Carlsberg, for those in the room, procure about 8% of the world's barley and have implemented a strategy Together Towards Zero and Beyond, which says by 2040, 100% of their agricultural supply chain will be regen farming certified. When you get under the hood of what they're really looking for with that, it's really working closer with their farming suppliers to understand the methods they use to farm in harmony with the environment, but produce sustained long-term crop outputs. What we need to do a better job of as a nation is understanding what those metrics are that matter, and telling our story boldly to those markets. So they prefer Australian produce produced in our challenging environment in a way that's aligned principally to their intentions, but perhaps we need to inform them better of what our sustainability frameworks are that validate our product's market pathway. So, with that in mind, there are 3 key changes that the task force has called for and published in the report, The Land of Plenty. The first, unsurprisingly, is accelerating access to and adoption of climate-smart farming practices, and a really fundamental part of that is maturing our standards around how we measure and report on sustainability, as well as making it simpler for the whole supply chain to bring the data together that is the evidence and proof points that the markets domestically and internationally are looking for. 55% of farmers find the maintenance and submission of data relating to sustainability and environment a burden on their businesses today. We need to do a better job at simplifying that for everyone. Sovereign supply chain resilience is another key call-out. And this is not just about transport routes. This is very much about making sure that we've got more domestic production capability of vital inputs to agriculture. Biosolutions presents a significant market opportunity for Australia. There is a large amount of waste biomass coming out of the Australian production system that could be repurposed into the sector, reducing our dependency on synthetic imported agrichem and fertiliser. There's also a significant opportunity to have more domestic input of key vitamin inputs, which lead to our value-added food product that we export to the world. And the third element of recommendation is market diversification. And I think congratulations to the Minister and DAF for announcing the National Food Security Strategy development. That is vitally important. I think it's really important we extend that to be about the security of Australia's food system, not just food production. We have a massive opportunity to turn this into Australia's second engine of economic growth if we take that focus and look for value add domestically in the way we produce food and what we export to the world, which includes our know-how. And Australia is absolutely recognised for the strength in carbon measurement frameworks. What we need to do better of as a nation is packaging up our climate smart farming practices and seeing that as an export pathway to markets that are finding their climate changing at a rapid rate. Markets like the US and Canada, but also major markets like India and Africa as well. So those were the three key findings. I look forward to unpacking those further in the discussion that will follow. We've summarised all of this in the Land of Plenty report. There are 11 core recommendations. Right at the heart is the need for a coordinated and serious focus on the food industry's potential. There are over 256 industry bodies and departments of agriculture, etc., in Australia focused on supporting the ag industry, but no one body works all the way through from agriculture to food to coordinate us as we lean into these big challenges and opportunities. And if we were to take a bit more of a deliberate focus on this, we could really activate the other 10 recommendations that you see on the screen here and reach our potential as a thriving, climate-smart, food-producing nation.
Thanks, Ben. Now, I'd love to see those questions coming through. Alex, it was by no surprise, and Jared, that a lot of those inquiry pillars will be discussed at ABARES throughout this conference. But I'd like to throw a question to you first, Alex. We heard a lot there about the volatility and the disruption globally, geopolitically. As we see this develop and change before our eyes, what are the impacts on agriculture?
I think it's, the word of the day is uncertainty. I think predicting this kind of thing is fraught with difficulty. I think Australia is well placed, though. We saw it in relation to the tariffs that China imposed on us, where by and large, in many cases, there's a few important exceptions, but Australian producers were able to find other markets when those tariffs were imposed. So I think that's the key is, obviously it hurts both the country imposing the tariff and the country that the tariff is imposed upon. So tariffs are not a great tool, and we've done some research previously that shows that, for example, if the US were to impose tariffs on China and Mexico, that would be bad for all of those economies. Not so much of an impact on Australia, but then if you broaden that out into a larger trade war across the world, then that's bad for Australia. And in fact, you get a global recession if that happens. But the key, in these uncertain times is for Australian producers to be able to have access to other markets, and so that's why the World Trade Organisation and the those sort of institutions around the world are so important, setting those rules and making sure that we have access to those other markets in case something like that happens. So I think that's largely the impact. It's not going to be positive for Australia. There's not much upside in the aggregate to that sort of uncertainty, but we can minimise the impacts by diversifying and finding other markets.
So if the result there is not positive, Ben, I'll throw to you perhaps some insight or suggestions on how things like tariffs could be translated and communicated to the general public. And I ask you this question given the Land of Plenty report and your comments on the announcement this morning of if we have a re-elected Albanese government on the food security strategy, which, by the way, I am chasing a response from the Coalition to see what their position is on that as well. So I guess the question to you now is, if these are the potential outcomes, how do we communicate this to the Australian public?
Yeah, it's certainly a very complex and changing environment. I think in terms of your question about informing the Australian public about the implications of tariffs. One of our big challenges, and that's why we talked about and focused on the supply chain sovereign capability enhancement, is when you have to import in order to have a key production component coming into the food and ag industry, and that might be machinery or it might be fertiliser, for example. When those imported products collect tariffs on the way through their supply chain coming into Australia, then clearly that's lifting the cost of input to what we're producing in Australia. What that means is that cost flows forward to the consumers domestically, as much as it does into the product that we then try and package up, value add, and send back into international markets. So, tariffs are a burden. It's a margin erosion for typically for the Australian food producer, but also it's affected at the till for Australian consumers as well. So what do you do about that? I think the point that Alex made about continuing to try and diversify your markets is hugely important. And also, I think it's really key that we think hard about how do we build less dependency on imported products that could attract tariffs as well. So we need to be doing more of that to insulate ourselves as much as possible. And I think focus on those near markets that we're having slightly different trading relationships with. There is huge potential for growth, and that's where a lot of our growth has come from, in the ASEAN market, and there's more we can do there.
We've zoomed in there on tariffs, but Jared, the question really is also about communicating and translating this opportunity and challenge to not just industry, but the general public. It's something that your Bureau and your annual report seeks to do. What are some other options if we are taking on new ideas and getting creative here on not just market access, not just domestic challenges and opportunities, but also globally?
No, it's a great question. I think, not to undersell actually, so the Australian agriculture, really jumped on some of these market opportunities opened by the Indian FTA. We had that tariff period. We grew a lot of chickpeas. We exported a lot, and so there's a responsiveness that I think is inherent in the entrepreneurial nature of our producers. I think when you look at the uncertainty that's created by these kind of circumstances, we know that markets take a bit of time to work out, deal with that uncertainty, and we've seen that, in the past conflicts with prices, they move around a lot and they jump. And I think hopefully the thing for organisations like mine is to try and see through some of that and say, well, where are the fundamentals leading? And it kind of links to what Ben was saying, that we know that we're good at a number of things and we've got a good product. At the moment, we're sitting at a fairly competitive point in global markets, and so then it's about what actionable options exist, and to avoid, I guess, rash kind of decision making that might come in when you see these announcements, to actually bed down that we've got options and then how do we take advantage of them. And I think that's a system-wide kind of approach, and I know that industry works closely with the department to try and understand when tariffs or other trade tensions or even just market access issues arise, to try and at least understand and not to have an immediate kind of adverse reaction. Look at what options we have. But I think when it comes to that broader system as well, it's really comes down in my mind to this kind of trying to invest in actionable options. When we're investing in market access, both on the import side and on the export side, are equally important. We want to kind of be able to pivot, but we can't pivot if we don't make the investments early. And we too often, I think, get caught up in trying to measure success as to whether we're using the options, but we should really be measuring success as to whether we have the options. And that really then comes to bear fruit when we do have a disruption.
Hold that thought before I throw to you, Alex. Just to put it to the floor, I'd love to see some questions come from the floor. There are microphones that will be roaming around. If you're joining us online, please also submit your questions via the app. Alex, to you now, to throw a spanner in the works on the back of some of what Jared just said there. If the rules of democracy and diplomacy are being written before our eyes right now, and in some parts of the world they are, what does this upheaval mean in terms of how we maintain and grow these market access opportunities?
Well, I think it's a headwind to productivity growth. Bring it back to my remit. Diplomacy and democracy is a bit out of my scope. I was once asked at one of these events, it was a question, I don't know if all of you know Jason Falinsky, who was a member down in Sydney, and he put it to me, the question was, Francis Fukuyama, someone else, and Alex Robson were wrong about the global order. Why were you wrong? So this is it's in the spirit of that question, I guess. Look, there's a lot of headwinds, and the rising protectionism and those sentiments has been around for the better part of a decade now, and it's a significant headwind for Australia because we're a small open economy. We rely on trade with the rest of the world. It adds a lot to people's incomes. It's a creator of jobs, as is foreign investment. And so all of those things, if there's those sorts of headwinds around the world, it's in the long run, it's not great for Australia. So we've got to do as much as we can on the economic side to minimise those risks. And so I would just have a issue though, a bit of a warning around the risk of turning inwards in relation to that. I mean, we do have to have some degree of obviously self-sufficiency in some aspects, but we're a trading nation. We have to remain as open as we can, and the policy options for dealing with this uncertainty, turning inwards and being totally self-sufficient in everything, and that's a sort of extreme example, but that's not the only policy option. We can work with allies, and friend-shoring has been a term that's been used quite a lot. We can stockpile resources, we can do other things. So there's a range of policy options there that we can utilise and think about carefully to address the risks that we're facing, and trying to quantify and spell out those risks as much as we can, and then choose the best policy option. So it requires a lot of careful thinking, and being self-sufficient, it can be very costly, and it introduces other risks as well. So, for example, I'm based in Brisbane, and we're facing a cyclone coming in Brisbane. Now, I don't know what the scenario that's going to look like. I grew up in Townsville, where you'd have cyclones every year and disruptions to production. But if you don't have access to imports, then that's an additional risk now you're facing if you don't have those access to different goods. So being self-sufficient it does introduce other risks, and I guess our point at the PC would just be to weigh up those risks. We're a trading nation. There's a reason that we trade with other countries, and part of it is actually to try to diversify some of those risks as best we can. So that's a long way of saying that should be our response here, is to try to remain as open as we can, diversify, use the rules-based international order as best we can, and try to just remain composed on the way through.
It's an important point to note the difference between self-sufficiency, a secure industry, and sovereign industry. Ben, I'll throw to you on that point to come in on the back of some of the things that Alex said, particularly about how we maintain these diplomatic relations with our trading partners. Already this morning, without going into too much detail, we've listed off at least 3 major allies and trading partners in ASEAN, India with the trade deal, UK trade deal. We've mentioned tariffs in the US. There's a long list that Australia engages with globally.
Yeah, look, I think we've got to look for the common ground in all of those markets. And, as you just one layer down below all those headlines is cost of living in most of those destination markets. And the key measure of cost of living for a lot of those trading partners is the cost of food. And so we're good at food. So we need to really emphasise that strength in how we work forward in enhancing our trade relations with those international markets. Now, whilst we're good at producing food, we are not as good as we need to be at producing a low-cost food product. And we see that when we do a survey every month of 22,000 consumers across 22 countries around the world, that Australia's food frugality index is the highest. That's not the position you want to be in. You want to be the lowest. So we need to do better at how we take cost out of our production system as well. So there's a real opportunity for us to be investing more into that automation and efficiency in how we produce in these, again, as Alex says, changing climatic conditions, because those are the same things that our trading partners need and want as well. So food has always been a key part of how Australia builds its trade relations. It's probably one of our most efficient aid mechanisms for developing countries, and it should be into the future as well. I think we just have to move beyond agriculture more into food processing and that value-added activity to try and open that up more than it is today with those trading partners.
I was certain that there would be a question coming from the delegates on ESG and sustainable farming practices. I'll throw this one to you first, Jared. And there's some synergy here in these questions, so I might merge them somewhat. Given ESG-related reporting is already considered a large burden, how do you envisage the AFF sector contributing to managing nature dependency risks explicitly? And just to add on to that, given 70% of agriculture is exported, why are the main climate smart reporting mechanisms, standards, why are they domestic focused and not internationally aligned?
Good questions. And I think I'll start by, going to one of Ben's points that came from the survey, that part of the challenge here is, that reward and recognition of some of these practices and the way that we're implementing climate smart and so forth. And to me, that's also around the design of markets. So, the property rights that are associated with some of these attributes. So we're producing in a low carbon way, or we're producing, using this, regenerative farming and so forth. How do you rest the property right that back with the producer so that the return from the demand from that comes back? And then that creates the right incentives to start to invest and to move forward and so forth. And so I think that's the challenge of the system, and that comes to the point about the system, the value chain, working in a way that's collaborative and acknowledging and setting up the systems, and that can come down to the way that we design the reporting system and the data and who owns that data in the first instance. And that will help, rest some of those property rights back and the reward and the incentive structure. So I think that's a key element of where this is going. But you're right. So one of the biggest challenges, though, comes back to that NTM space that I was talking about, that we've got, when the Minister mentioned 169 different markets that we're selling to, and those markets will be idiosyncratic in the sense of what they want, the different systems they have, and all those things. And then we'll have also domestic expectations amongst our consumers, which again will be idiosyncratic to everyone else. And how do you get these different systems into work? And there's a big aspect which we often talk about, technical market access and the trade sense, but it's about effectively international regulatory cooperation at the government level, but that's also at that firm level and so forth. And so I think it's useful that we do have systems that can create those property rights, like the domestic systems, but then the next challenge is then taking that step out, and how do we make them, talk in a least cost way to all those 169 systems, because you can't have 169 systems at home. It just doesn't work.
Alex, is this a question also of somewhat of a fine line between our domestic approach and then the international global approach, but then also the other way of how that global approach is influencing our domestic approach so that we have more of a consistent, seamless ecosystem occurring? How can we manage that?
On ESG you're talking about, or more generally? Or?
Let's go ESG, and then
Okay.
I'm sure you could have a field day with generally.
I think you're right. For example, over in the OECD, Australia consistently raises the issue of European subsidies in agriculture and their environmental impacts. And so, these multilateral institutions, that's, where you would deal with this internationally. And Australia has a pretty good story to tell in those kind of fora. But there is that important interaction between the two. But I guess, Australia's got to make the case internationally that there are these, distortions. And going back to Jared's point about the non-tariff barriers, that can be a form of a non-tariff barrier as well, the differentials in the way these things are treated. And so it's in Australia's interest to remain active in those international fora and put our case. And so if we are doing things that are, international best practice that other countries aren't, it's in our interest to, create that level playing field. and we then compete on our own merits rather than having those markets distorted against us.
Ben, you spoke about the desire for recognition for these sustainable practices, but also compensation. If we see a change in recognition, compensation, or disruption in the momentum of adopting some of these practices, what is your assessment based on the data that's been collected on the Land of Plenty report that would, in the short term and medium term, occur?
Yeah, it's really interesting, Kate. I might start my answer with what we're seeing in some of the markets we send our products into, right? And I'll just spotlight one of the nations that we talked about earlier. So this year, voluntary climate smart labelling has been introduced into Denmark. Okay, not a big country, but has some of the world's largest food and beverage brands calling Denmark home. So when that happens and you introduce a voluntary attributed life cycle assessment method of saying how much embodied carbon is there in a wine bottle or a steak or a litre of milk, and then allow the supermarkets to pass that onto a product, even if it's an imported product from Australia and we haven't done our own assessment. That's happening right now in markets like Denmark that have a big spillover effect into wider markets in the European Union. So the rate of change at which these communication methods to the consumer are occurring is really accelerating. And when you talk to the retailers in Denmark around why are you doing that, their answer is 65% of our consumers want data on the climate impact of our food product. Okay, so it's a consumer-driven demand. Now that won't be the same in every other market, but where a consumer is discerning and a brand is able to tell a story, then you get really different behaviour shifts. And if you follow the Arla story through, they've done an attributed LCA right back across all of their 8,000 suppliers, mapped their most efficient manufacturing sites, and connected the flow of low embodied milk, carbonate milk, through the most efficient factories into the most low carbon content end product to then take to a retailer who wants to tell the story and get a premium for it. Now that is not going to happen at all instances, but it's an example of how value is starting to come back. So that same business has recognised that they have a commitment under science-based target initiatives to achieve a 30% reduction by 2030, but they're off track. So rather than buying carbon credits, they're working with their farmer to reduce the emissions on farm and funding the farmer for the improvement that they make. And rather than paying for that exclusively themselves, they're collaborating with their retail supermarket supply chain partners. So there are really interesting ways that we can get more cohesive supply chains and people working together to inset for the outcome that is needed. And I think that is an opportunity for Australia. We're not seeing anywhere near enough of that. We're seeing it in the US, we're seeing it in Canada, we're seeing it in Europe. We're not seeing enough of it in Australia, and there's a big opportunity here for that.
I'm very conscious of the time and getting everybody fed. This is a conference about food after all. So I might throw this last question to anybody who wants to take it on the panel. But if that was about consumer behaviour, what about through the lens of land health? Jared, is that something you want to dig into?
Yeah, again, it's a question about like, how do we encourage producers to continue? And I think our producers have got a good track record in kind of concerned about land health and some of the improvements we've seen, and some of the data that we've been digging through on a range of sustainability metrics kind of point to the idea that we've got this sustainable intensification across the landscape. We're using less land in agriculture than we used to. We're producing a lot more. Some of the outcomes from that production in terms of nutrient balances to biodiversity to our emissions profile, all that are improving. So I think part of the pressure that's needed is the lack of subsidies that Alex mentioned, that we're not encouraging people to overuse anything which we see in Europe, because you get paid to produce a certain crop and then you do that at the expense of a rotation, and then that leads to a number of environmental outcomes. But also then it's about how do we, make sure that the market signals are there that people can respond to then further embed those practices. The adaptation challenge around that is going to be difficult because part of what we'll see with climate change is the need to shift practice in certain locations. We've seen agriculture move across the landscape over the past 80 years, and we do things differently in different locations, but we need to be able to facilitate that. And so making sure that there's no regulatory barriers to the cropping sector walking south, as we see when with the changes in our weather pattern, that we can shift out of some industries and into others is important. And so that's going to be part of that I mentioned, that kind of lean and clean playbook, and which will help land health and help our sustainability story.
A good note to end on there. I think we can all agree that we've only just scratched the surface on some of the challenges and opportunities that will be discussed throughout the conference. I would like to point out before I let you all go to morning tea that all of the reports that the data was derived from this morning will be available via the app and on the ABARES websites and conference communication. It is the most up-to-date, so it is definitely the source of data to draw from. If you could all join me in thanking our panellists.
Thank you, Kate.